Imagine a company operating in an industry so fundamental, so ubiquitous, yet so often overlooked, that it holds a surprising key to one of the biggest challenges of our time: global energy consumption.
Yeah, I mean, we're talking about buildings, right?
Exactly. Responsible for a staggering 40% of the world's total energy use and almost a third of global greenhouse gas emissions. It's huge.
It really is.
But what if a quiet giant in the insulation world isn't just facilitating new construction, but actually retrofitting millions of existing structures, making them vastly more efficient and, sustainable?
That's the interesting part, the hidden impact.
Today on the Deep Dive, we're unearthing the story of TopBuild Corp, ticker symbol BLD on the New York Stock Exchange. We've meticulously combed through an in-depth investment analysis to pull out the most important insights.
Yeah, we really dug into the details on this one.
Our mission for you, the listener, is to explore TopBuild's unique market position, its strategic moves, and the opportunities and challenges it faces. We want to give you a shortcut to truly being well-informed about this fascinating business.
And discover why this seemingly boring industry is actually at the epicenter of powerful economic and environmental shifts.
Building the future of efficiency, one insulated wall and roof at a time.
It's precisely that hidden significance that makes this deep dive so compelling. We'll be focusing on how TopBuild has strategically positioned itself, not just as a supplier, but as a crucial partner in improving the energy footprint of structures across North America.
So let's unpack this. What exactly is TopBuild Corp? What do they do, and what's their scale?
Okay, so at its core, TopBuild Corp is the premier installer and specialty distributor of insulation and building envelope solutions across the United States and Canada.
Premier, meaning number one.
Exactly. When we say premier, we mean they hold the number one market position in residential installation and distribution. This isn't just, selling a product off a shelf.
Right.
It's about providing comprehensive end-to-end solutions, from consulting on building science to actually installing the materials. It's the whole package.
And they have two distinct but seemingly interconnected ways of doing business, right? Two main segments.
Exactly. They operate through two key segments that really reinforce each other. The first is installation services, primarily known under the brand TruTeam.
TruTeam, okay.
This arm provides direct installation services, often on a large scale, to national production builders, regional home builders, multifamily contractors. Basically, they're on the job site doing the physical work.
Got it. And the second part?
The second segment is specialty distribution, operating as service partners. This part focuses on supplying insulation and related building materials to thousands of smaller local contractors.
Ah, the smaller guys who can't buy direct.
Precisely. Those who might not have the volume or direct access to manufacturers. So this dual approach gives them an incredibly broad market reach, from the biggest national players right down to the smallest local crews.
I also see they've made a big recent move, a fairly transformative one, into commercial roofing. How significant is that, and what does it mean for their overall strategy going forward?
Oh, it's a profoundly strategic evolution for them. A real game changer, actually. This expansion into commercial roofing significantly broadens their total addressable market, which now stands at approximately $18.25 billion.
Wow, okay.
Think about it. They're moving beyond just the insulation of a building shell to encompassing the entire building envelope, which includes walls, foundations, and roofs. The whole barrier between inside and outside.
Right, the whole protective layer.
Exactly. This isn't just about diversifying their reach. It's about capturing a larger share of the construction and renovation dollar, offering a more comprehensive, integrated solution to their customers, especially in the commercial sector.
So, with that kind of foundational understanding of their business model and their scale, if we're looking at this from an investment perspective, what are the compelling reasons someone would actually want to own a piece of TopBuild for the long haul? What's the bull case that really gets investors excited?
Well, there are several powerful investment merits forming a very strong bull case. First and foremost is their unrivaled market leadership in what is, surprisingly, a highly fragmented industry.
Fragmented, you mean lots of small players?
Exactly. When you imagine the insulation market, you might think of a few big names, but beneath TopBuild, there are literally thousands of small, local insulation installers, often operating within just a single county or state. TopBuild's national scale, its extensive branch network, and massive purchasing volume provide significant, almost insurmountable competitive advantages over these smaller players.
How so? What does that scale do for them?
Well, they can outcompete on price, because they buy materials by the train car, not by the truckload. They offer unparalleled efficiency and consistency, which large national builders absolutely demand.
So scale really makes a difference here. It's not just about being big, but how that size translates into tangible, almost insurmountable benefits for a competitor.
Precisely. Imagine being a small, local installer trying to compete. TopBuild, because of its sheer volume, gets preferential pricing from manufacturers. They're buying materials at a cost that a small outfit simply cannot match.
Right. A built-in cost advantage.
A significant one.
Right.
Which they can either pass on to customers as competitive pricing or retain as higher margins.
Yep.
But it's more than just price. Their national presence also means they can offer unparalleled consistency.
That makes sense for big builders.
Yeah, a large builder operating across multiple states wants the same quality, the same service standards, the same reliability, whether they're building in Florida or California. TopBuild can guarantee that. Smaller, regional players simply cannot replicate that level of consistency.
So it simplifies things massively for the builders.
Drastically. It simplifies procurement, project management. It makes TopBuild a deep, embedded partner, not just some transient vendor they swap out easily.
That makes perfect sense. What's the next big reason for optimism? The next pillar of the bull case.
Second, they have a proven M&A platform. And this isn't just a side project. They've truly established a core competency in sourcing, executing, and integrating acquisitions.
So buying other companies is key to their growth.
Absolutely. It's their consistent strategy for consolidating that fragmented market and driving inorganic growth. Since its spinoff in 2015, they've acquired 31 companies, 22 of those in just the last 5 years alone.
Wow, that's a lot of deals.
It is. And this isn't just opportunistic buying. It's a highly programmatic, well-oiled machine. The recent $810 million acquisition of Progressive Roofing is a clear yet transformative example.
Right, the big roofing deal.
It establishes a whole new platform in the commercial roofing sector and really demonstrates their ambition and their refined ability to execute on larger, more complex deals now.
Okay, here's where it gets really interesting for me. You've mentioned powerful secular tailwinds. You know, for a long time, I've thought of insulation as a pretty stable, maybe even a bit boring business. But then you hit me with this phrase, powerful secular tailwinds. That sounds like a long-term underlying force that could fundamentally transform this industry. What exactly does that mean for TopBuild beyond just the current economic cycle? This is where it gets truly fascinating for me.
Yeah, this is critical to their long-term story, and it's anything but boring, actually. TopBuild directly benefits from the long-term, non-cyclical trend towards greater energy efficiency.
Non-cyclical, okay.
This isn't a fad. It's a fundamental shift driven by both compelling economics, saving money on heating and cooling, and growing environmental concerns about carbon footprints.
Right, everyone wants lower energy bills and to be greener.
Exactly. And this trend is reinforced by increasingly stringent building codes that mandate higher insulation levels in new construction. But what truly makes it a super cycle is that it's significantly bolstered by federal government incentives, specifically the Inflation Reduction Act of 2022.
Ah, the IRA. How does that fit in?
Well, this act subsidizes energy-saving home upgrades for existing structures. This creates a durable demand that moves independently of new housing starts.
So that suggests demand for their products and services goes beyond just new construction, right? It sounds like there's a huge, almost recession-proof retrofit market as well.
Precisely. Think about what that independently truly means for a company traditionally tied to housing starts. It means even if new home builds slow down dramatically due to rising interest rates, TopBuild isn't left scrambling. Instead, they pivot to that existing homeowner who, thanks to the IRA, suddenly has a compelling financial reason and often a direct government subsidy to upgrade their attic insulation, seal their ducts, improve their walls.
It's a totally different demand driver.
It is. It's almost like having a built-in economic shock absorber.
Yeah.
This creates a resilient business model. Their diversified and resilient business model also helps smooth out earnings volatility.
How so?
Well, their balanced exposure to both installation services and distribution, as well as residential and commercial markets, contributes to this stability. And that strategic move into commercial roofing, it further enhances this by adding a significant stream of non-discretionary needs-based re-roofing revenue. Think about it. Roofs need replacing due to wear and tear, regardless of new housing starts.
Right. That's not optional.
It's a revenue stream less correlated with new construction cycles, provides a crucial buffer against economic swings.
And what about their internal operations? Are they able to convert all this growth into strong financial performance? Is the execution there?
Absolutely.
Okay.
They've demonstrated operational excellence and strong financials. They have a consistent ability to expand margins and generate robust free cash flow.
Which is key.
It is. And this isn't accidental. It comes from disciplined execution, effective pricing strategies that allow them to pass on costs, and the successful integration of all those acquired businesses. They make sure these bolt-ons genuinely add value to the bottom line rather than just adding size. Their focus on efficiency is deeply ingrained in their culture.
That's the compelling bull case. But every strong company has its risks, its potential Achilles heel. We've heard the reasons to be optimistic, but what are the key challenges or potential downsides for TopBuild? What's the bear case we should be watching out for, even with all their strategic advantages?
Yeah, absolutely. Despite its significant strengths, TopBuild faces inherent risks, and it's crucial for any informed observer to understand them. First, and perhaps most obvious, is inherent cyclicality.
Still tied to construction cycles.
Yes. While they've diversified, the company's financial performance is still fundamentally tied to the health of the U.S. construction industry, particularly new residential housing starts. It's highly sensitive to broader macroeconomic factors like interest rates, inflation, consumer confidence.
All the stuff that makes people decide whether to build or buy a house.
Exactly. If mortgage rates spike or inflation erodes purchasing power, new construction can grind to a halt very quickly.
So even with all the talk of diversification and those secular tailwinds, they're still exposed to the ups and downs of the housing market.
Yes, that exposure remains significant, though it is being meaningfully mitigated by their strategic diversification. They're not immune. Second, they face M&A integration risk.
Especially with that huge roofing deal.
Exactly. The Progressive Roofing acquisition is their largest in history, costing $810 million, and it introduces significant integration challenges, combining different corporate cultures, which can be notoriously difficult, retaining key talent from the acquired company, and truly realizing those projected cost and revenue synergies. Well, it can be a much harder task in practice than on paper.
Right, mergers aren't always smooth.
No. If not managed well, this could negatively impact their financial performance, leading to unexpected costs, lost revenue, or even a write-down of goodwill. That's always a risk with big deals.
What about their costs? Are they vulnerable to rising material prices or labor costs, especially with supply chain issues we've seen globally?
Absolutely. They face input cost and labor pressures. The business is exposed to volatility in raw material costs, things like fiberglass, spray foam, which can fluctuate significantly with broader energy prices and the costs of chemical feedstocks.
And labor. Construction always seems short-handed.
That's a big one. The broader construction industry faces a persistent, almost endemic shortage of skilled labor. This can lead to wage inflation, increasing their operating costs, and it can also cause project delays if they simply can't staff jobs adequately.
So higher costs could squeeze their profits.
Yes, if these higher cost materials or labor can't be fully passed on to customers through price increases, it will directly compress their margins. It's a constant balancing act.
And competition. Even as a market leader, are there forces that could chip away at their position, maybe from smaller players?
Definitely. While TopBuild is indeed the market leader, barriers to entry for local insulation and installation are relatively low.
Meaning it's easy to start a small insulation business.
Relatively speaking, yes. Anyone with a truck, some tools, and a crew can technically start an insulation business. This means they face persistent competition from thousands of smaller, regional players.
And those small guys can be aggressive on price.
Especially during market downturns. When volume is low and everyone is fighting for every single project, these smaller firms might compete aggressively on price. Maintaining their national market share and pricing power in such a fragmented landscape is a continuous, hard-fought challenge. Requires constant vigilance and execution.
Let's broaden our view now beyond just TopBuild and look at the U.S. insulation market itself. What does it look like and what's driving its growth? It sounds like a pretty active space, especially with all these trends you're mentioning.
Yeah, the U.S. insulation market provides a very healthy and growing backdrop for TopBuild's operations. It's a strong rising tide, you could say. Estimates for 2023-2024 range from $12.5 billion to $13.3 billion.
That's pretty big already.
It is. And strong growth is projected for the next decade. Forecasts indicate the market will expand at a compound annual growth rate, or CAGR, of somewhere between 6.4% and 7.8%.
Wow!
Potentially reaching over $21 billion by 2034. That's substantial, indicating robust underlying demand that is not just cyclical.
That's significant. What's truly powering this growth? Is it just new buildings or something more fundamental, like the energy efficiency angle we touched upon?
It's absolutely more fundamental. The primary catalyst is the persistent, undeniable demand for energy efficiency in both residential and commercial buildings.
Makes sense.
This is a powerful economic incentive. Proper insulation can reduce heating and cooling expenses by up to 30%. With energy costs often volatile and generally trending upwards, think about your own utility bill. That's a compelling, immediate argument for homeowners and businesses alike to invest in better insulation.
It's a tangible return on investment.
Definitely. A very clear one.
And beyond the economic aspect, is there an environmental driver at play as well? A growing consciousness around green building?
Absolutely. A growing focus on environmental consciousness and reducing carbon footprints has significantly accelerated the adoption of green building practices.
Right, ESG goals and just general awareness.
Exactly. Since buildings account for such a significant portion of total energy consumption globally, high-performance insulation is now viewed not just as a cost saver, but as a critical component of environmentally responsible construction. It's not just about saving money anymore.
It's about doing the right thing, too.
Right. And we're also seeing technological advancements in insulation materials themselves. Innovations like higher performance spray foam, advanced polyisocyanurate, reflective insulation. These offer superior thermal efficiency, noise reduction, even fire resistance.
So the products themselves are getting better.
Continually. And these advancements drive adoption in both new construction and retrofits, creating new demand and replacement cycles as older materials become less efficient or effective.
This regulatory supercycle sounds like a powerful, perhaps unseen force at work, almost a silent partner to demand. How does it specifically shape demand for insulation going beyond just market economics?
It truly is a powerful regulatory and legislative tailwind that is structurally increasing the required insulation content in buildings. This creates a unique dynamic where demand for insulation products can grow independently of the number of new construction projects.
Independently, meaning even if fewer houses are built, they need more insulation per house.
Exactly. It's almost like a baseline, a floor underneath the market, ensuring consistent demand even in slower construction periods.
How do these regulations actually work? Are they federally mandated or more local, like city by city?
They're primarily driven by the International Energy Conservation Code, or IECC. Now, this isn't a federal law itself, but rather a model building code that is developed and updated every 3 years.
Okay, a model code.
Crucially, it's then adopted and enforced at state and local levels across the U.S. Each iteration generally mandates stricter energy efficiency standards.
Stricter meaning higher R value.
Exactly. A key component is the required R value, which is that measure of thermal resistance. Think of R value as the thermal SPF for your home, its ability to resist heat flow.
Right. Higher is better insulation.
Yes.
Yeah.
So higher R value requirements directly translate into a greater volume or higher quality of insulation needed for walls, attics, foundations to achieve compliance. This continuous upcoding, as they call it, provides a powerful, long-term secular growth driver.
Because buildings have to meet these codes.
They have to. It cushions cyclical downturns because buildings must meet these evolving, increasingly stringent standards to get permits and pass inspections.
And what about government incentives? Are they playing a significant role in this supercycle? Beyond just regulations, is there a financial push from the government side?
Definitely. And this is where the supercycle part really comes into play. The Inflation Reduction Act of 2022 provides a significant near-term catalyst, especially for the repair and remodel market, which is a huge opportunity.
How so? What does it do?
It allocates a substantial $8.8 billion to the Department of Energy's home energy rebate programs. This includes things like the HOMES program for whole house efficiency upgrades and the HERE program for electrification projects.
Okay, so direct money for upgrades.
Right. These programs directly subsidize the cost of adding or improving insulation in existing homes. For you, the homeowner, this means potentially thousands of dollars in rebates or tax credits for making energy-efficient improvements.
Which makes people more likely to actually do it.
Absolutely. It pulls forward demand, encourages homeowners to act, and significantly expands the retrofit market, a massive opportunity for TopBuild that wasn't previously incentivized to this degree.
TopBuild's performance is tied to the broader U.S. construction market. How's that looking right now? Are we in a boom, a bust, or somewhere in between? It sounds like things are stabilizing.
Yeah, the broader construction market is indeed showing signs of recovery and resilience, moving past some of the headwinds of recent years. The residential outlook actually forecasts a rebound after a period of contraction due to higher interest rates.
A rebound? How strong?
Projections are for a healthy 12% growth in 2025. This is supported by stabilizing inflation and the prospect of lower interest rates, which should make home buying more affordable and spur new construction starts.
Okay.
And recent U.S. Census Bureau data shows privately owned housing starts at around 1.321 million, indicating continued robust activity that directly fuels TopBuild's pipeline for installation. There's a fundamental demand for housing that hasn't gone away.
And how does the commercial side of construction compare? Is it seeing similar tailwinds?
The commercial construction sector is also poised for moderate, steady growth. It's particularly strong in segments like healthcare facilities, educational institutions, high-demand data centers, and manufacturing facilities related to those reshoring initiatives.
Right, bringing manufacturing back.
Exactly. And TopBuild's acquisition of Progressive Roofing is especially well-timed here because it strategically diversifies their exposure.
Because of the re-roofing part.
Precisely. Progressive derives approximately 70% of its revenue from non-discretionary re-roofing and maintenance services. This means their business is driven by the age and condition of existing roofs they wear out, they need replacing, regardless of economic cycles.
Not tied to building new stuff.
Right. It's not tied to the more volatile new construction starts. This provides a stable, recurring revenue stream and significantly reduces TopBuild's dependence on the more cyclical new residential market. Makes their overall revenue profile much more resilient and predictable.
That makes a lot of sense, adding that crucial buffer. What about the underlying challenges with materials and labor in this industry? Are they seeing steady supply, or are there significant bottlenecks and cost pressures?
Well, the primary materials used are fiberglass, mineral wool, and foamed plastics, while supply has largely stabilized following those pandemic-era disruptions.
Right, that was rough.
Yeah. But their costs can still be volatile. These materials are influenced by broader energy prices and the costs of chemical feedstocks needed for production. So, input cost management remains an ongoing, vital challenge that requires constant vigilance.
And the workforce. We often hear about persistent labor shortages across many sectors, and construction seems particularly impacted. How did that impact a company like TopBuild?
That's a significant industry-wide challenge that they manage very actively. The construction sector faces a persistent shortage of skilled labor. This can lead to wage inflation, increasing their operating costs.
Makes sense.
And it can also constrain the ability of installers, including TopBuild, to meet demand efficiently or take on new projects. If you can't find the crews, you can't do the work.
But being bigger helps them there, maybe.
Potentially, yes. As a large national employer, TopBuild is often better positioned than its thousands of smaller competitors to attract, train, and retain a skilled workforce. They can offer more consistent work, better benefits packages, clearer career paths, things that smaller local firms often struggle to provide. This potentially turns an industry-wide headwind, the labor shortage, into a competitive advantage for them, as they can more reliably staff projects.
Let's get into the specifics of how TopBuild actually makes its money, breaking down their business segments. Tell us about the installation segment, TrueTeam, which accounts for a significant 62% of their total revenue.
Okay, yeah, this is their operational powerhouse. As you said, it's their largest segment, representing the majority of their total revenue. It operates through an extensive network of approximately 250 branches nationwide, primarily under the TrueTeam brand.
So they're everywhere.
Pretty much. This widespread physical presence means they can serve customers in virtually every major construction market across the U.S. and Canada.
What's their core business model here? Are they just subcontractors, or do they offer more?
They provide turnkey installation services directly to a very diverse customer base. This includes the largest national production builders, think D.R. Horton or Lennar Regional Builders, custom home builders, and large multifamily contractors.
Turnkey meaning they handle everything.
Essentially, yes. And while insulation is their core offering, they also offer adjacent services, adding value to their overall package. These include installing gutters, fireplaces, garage doors.
Oh, okay. More than just insulation.
Right, which collectively account for about 16% of the company's total product mix. This broadens their utility to builders and helps capture more work on a single project, streamlining the process for their clients.
What's the key value they offer to these large builders, especially since they're operating across multiple states where consistency would be paramount?
Yeah, consistency is huge. The key value proposition for large builders is TopBuild's ability to provide consistent, reliable service on a national scale.
Instead of managing lots of local guys.
Exactly. Imagine being a national builder trying to coordinate dozens of different local insulation contractors across various states. It would be a logistical nightmare. With TopBuild, a large production builder can contract with a single entity.
One phone call, basically.
Pretty much. It simplifies procurement, standardizes their installation process, centralizes project management across numerous sites, and furthermore, their TopBuild Home Services division provides specialized building science expertise.
Building science? Like what?
This includes crucial services like pre-construction plan reviews and home energy rating system, or HERS, index ratings. As energy codes get increasingly complex, this consultative service is a crucial differentiator.
So they help builders meet the codes?
Yes. It embeds TopBuild deeper into their customers' value chain by helping builders design and construct compliant, highly energy-efficient homes. It adds a layer of sophisticated expertise beyond just basic installation. They become a problem solver, not just a service provider.
That's a strong differentiator. And the specialty distribution segment. How do service partners fit into the overall picture, accounting for the remaining 38% of revenue?
Okay, so this segment operates through over 190 branches across the U.S. and Canada, primarily under the Service Partners brand. It acts as a critical intermediary between insulation manufacturers, the Owens Cornings, the Johns Manvilles of the world, and that fragmented base of thousands of smaller, local insulation contractors and builders.
The supply hub for the little guys?
Exactly. They distribute a wide range of building materials, not just insulation, serving as a vital link in the supply chain for these smaller players.
What specific value does Service Partners provide to these smaller contractors who can't buy directly from the big manufacturers?
They provide immense value through logistics, product availability, and technical expertise. Smaller contractors simply lack the purchasing volume, the warehouse space, or the direct relationships to buy directly from major manufacturers at competitive prices.
So they need a middleman.
But they do. They rely on distributors like Service Partners for access to materials, which are available locally with short lead times. This is absolutely critical in the fast-paced, often just-in-time construction industry where delays cost money and can derail project timelines. Service Partners acts as their local warehouse and expert resource.
So these two segments clearly work together. Is there a synergy between them, or do they operate almost independently?
Oh, absolutely. There's a powerful self-reinforcing synergy. The dual segment model creates a virtuous cycle.
How does that work?
Well, the installation segment's on-the-ground presence in hundreds of markets provides real-time intelligence on local market demand, pricing dynamics, labor conditions, emerging product trends.
So boots on the ground feeding info back.
Exactly.
Yeah.
This granular information directly informs the distribution segment's purchasing and inventory strategies, helping them stock exactly what's needed where it's needed, optimizing their supply chain.
Makes sense.
And in turn, the combined purchasing volume of both segments significantly enhances their negotiating power with material suppliers.
Leveraging their total size.
Yes. This creates a substantial cost advantage for the entire enterprise, making them more competitive than companies operating just one segment or with less scale. They truly leverage their collective size.
What protects TopBuild's market position and profitability? What are its durable competitive advantages or moats that make it difficult for others to replicate their success?
Yeah, TopBuild benefits from several key durable moats that protect its business and make it difficult for new entrants or even existing competitors to challenge them effectively. First, their scale and purchasing power.
We keep coming back to scale.
Because it's fundamental here. As the nation's largest insulation installer and distributor, their procurement volume provides a significant cost of goods advantage over smaller competitors. They can buy materials cheaper because they buy so much of it.
Right.
Second, geographic density. With a combined network of over 440 branches strategically located across the country, their national footprint is a massive differentiator.
440 branches.
Wow. Yeah. This density creates logistical efficiencies, allowing them to serve clients more quickly and cost-effectively, reducing travel times, optimizing delivery routes. This scale makes them the partner of choice for large, multi-regional builders who value consistency and reach.
That network sounds like a really strong barrier to entry for any new competitor. It would be incredibly expensive to build.
It truly is. They've also cultivated deep, long-standing customer relationships with the largest production home builders in the country. These relationships are built on years of reliable execution, consistent quality, problem-solving.
Trust, basically.
A lot of trust. This creates sticky and recurring revenue streams that are incredibly hard for new players to break into. Builders aren't going to switch providers easily if TopBuild is delivering consistently.
Makes sense.
And finally, while the capital required to start a small local installation business might be low, as we discussed, often just a truck and some tools, the barriers to entry for achieving national scale like TopBuild are formidable.
Much harder to go big.
Immensely harder. Replicating their extensive 440 branch network, their complex logistical infrastructure, their established supplier relationships, their advanced IT systems, their deep embedded customer base. It would require immense capital, decades of effort, and a level of operational integration that is incredibly difficult to achieve. It's a very robust, multi-layered moat.
Given all that, who are their main competitors in this market? Is it a few big players or many small ones, or a mix?
Well, the competitive environment varies by segment. The most direct public competitor, and the one most often compared to TopBuild, is Installed Building Products, or IBP.
IBP, okay.
They operate a similarly installation-focused business, though with a smaller distribution footprint. Companies like Owens Corning and Johns Manville, they're primarily material manufacturers and suppliers.
So they sell to TopBuild.
Exactly. They sell to TopBuild, so they're not direct competitors in the installation and distribution services. Crucially, the vast majority of competition, and this is important to understand TopBuild's strategy, comes from those thousands of small, privately owned local and regional installation contractors.
The ones they buy.
Exactly. These are the companies TopBuild actively targets for acquisition as part of its ongoing programmatic growth strategy. They're consolidating a fragmented market.
Let's turn to the numbers. What does TopBuild's financial history reveal about their performance over the past 5 years? Have they consistently grown and improved profitability?
Yeah, an analysis of their financial results over the past 5 years reveals a remarkably strong track record of profitable growth. This has been driven by a powerful combination of strategic acquisitions, favorable market conditions in the construction sector, and, crucially, disciplined operational execution.
So a mix of buying growth and running the business well.
Precisely. They've successfully expanded revenue while simultaneously improving profitability, demonstrating significant operating leverage, meaning their profits grew faster than their revenue.
That's what you want to see.
Absolutely. And crucially, their cash flow generation has been robust and consistent, providing the capital necessary to fund their aggressive acquisition strategy and their share repurchase programs without taking on excessive debt.
We have a summary of their 5-year financial performance from 2020 to 2024 right here. Can you highlight some key trends that jump out at you from this data?
Certainly. Let's look at total net sales first. They grew from about $2.7 billion in 2020 to an impressive $5.3 billion in 2024.
Wow, nearly double in 5 years.
That's nearly double. It's a testament to both their organic growth in a generally growing market and their highly successful M&A strategy. This isn't just incremental growth, it's substantial.
That's really substantial growth in revenue. But growth isn't always profitable. What about profitability? Has that kept pace or even improved, indicating good cost control?
It has. And in fact, it's shown exceptional improvement. Total operating income increased from $355 million in 2020 to $886 million in 2024.
Also more than doubled.
Right. But what's even more telling, and a key indicator of their operational strength, is their consolidated operating margin percent. This consistently expanded, moving from 13.1% in 2020 to a strong 16.6% in 2024.
So that they're getting more profitable on each dollar of sales.
Exactly. Achieving this margin expansion during a period of significant revenue growth and supply chain volatility demonstrates excellent cost controls, effective pricing power, their ability to pass on rising material costs, and the successful integration of higher margin acquired businesses. They're getting more profitable on every dollar of sales, which is a sign of a very well-managed company.
And what about cash generation? Because ultimately cash is king, right? How does that look?
Cash generation is another major highlight and underscores the quality of their business model. Net cash from operations jumped from $358 million in 2020 to $849 million in 2023.
Huge jump there.
It is. This robust free cash flow, which nearly doubled from 2021 to 2023, further underscores the business's high-quality financial model. They're not just growing revenue and operating income on paper, they're converting it into hard cash.
Cash they can use for more deals or buybacks.
Exactly. Cash that they can then reinvest in more acquisitions or return to shareholders through buybacks. This consistency of cash generation provides immense financial flexibility. And beyond just sales and profits, The company's ability to generate high returns on the capital it employs, measured by return on invested capital, or ROIC, is a critical measure of its value creation.
ROIC. So how much profit for every dollar invested?
Pretty much. Think of ROIC as how much profit they make for every dollar they put into the business, whether that's through internal investments or acquisitions.
Yeah.
This efficiency is a testament to management's disciplined approach to both operations and capital allocation.
Shows they spend money wisely.
Yes. It proves their ability to deploy capital, particularly through acquisitions, and generate profits that consistently exceed their cost of capital. Meaning, they're not just growing, but they're generating returns on their investments that are significantly higher than the rate they pay to borrow money or raise equity. That's the hallmark of a truly efficient, value-creating business.
Acquisitions are clearly central to TopBuild's story and how they've achieved that impressive growth. How problematic is their M&A strategy? Is it opportunistic or a structured, disciplined part of their business?
Oh, it's absolutely the primary engine of their growth strategy and their number one priority for capital deployment. This is not an opportunistic endeavor driven by fleeting market conditions. It's highly programmatic, almost an assembly line approach to consolidation.
Like it's just part of the business plan.
Exactly. Since its 2015 spinoff, the company has acquired 31 companies, with 22 of those transactions occurring in the last 5 years alone. This demonstrates a consistent, highly programmatic approach to consolidating its fragmented markets, turning that fragmentation into a strategic advantage by rolling up smaller players.
Have they always targeted the same kinds of acquisitions, or has their approach evolved, perhaps in response to market conditions or even regulatory hurdles?
Their strategy has definitely evolved, showing their adaptability. Historically, the focus was on smaller, private bolt-on acquisitions of insulation installers and distributors. Companies like California Building Products, which had $18 million in revenue, or LCR contractors with $58 million.
Smaller, digestible deals.
Right. The primary goal there was to expand their geographic presence and increase density in existing markets, filling out their national footprint. However, their ambitions have grown significantly.
Like trying to buy SPI.
Exactly. They even attempted to acquire a much larger rival, SPI, for $960 million back in 2021. But that deal was ultimately terminated due to antitrust concerns from the Department of Justice.
Got too big for their core market, maybe.
That seems to be the implication. The DOJ viewed it as potentially reducing competition in the core insulation distribution market. This experience likely highlighted the limits of large-scale consolidation in their existing core market and may have prompted them to strategically seek growth in adjacent verticals.
Which led them to roofing.
Precisely, leading directly to their most recent, very large acquisition.
This leads us perfectly to the July 2025 acquisition of Progressive Roofing. How transformative is this deal, especially given the history you just described and the failed SPI bid?
It is indeed a truly transformative event for TopBuild. This transaction, costing $810 million in cash, marks a significant strategic evolution from those smaller bolt-ons to a true large-scale platform-building acquisition.
A whole new platform.
Yeah, it's a bold and calculated leap in their M&A strategy, designed to open up entirely new avenues of growth.
What was the strategic rationale behind spending such a large amount on a roofing company, seemingly outside their core insulation business?
Well, the deal provides TopBuild with an immediate market-leading position in large, estimated at $75 billion annually, and highly fragmented commercial roofing sector.
$75 billion, that's a huge market.
It's massive. And this move allows them to offer a more comprehensive building envelope solution to their commercial customers, leveraging their existing relationships. And crucially, it significantly increases their exposure to non-discretionary revenue streams.
The re-roofing part again, less cyclical.
Far less cyclical than new construction.
So more stable revenue, even if the economy dips or new housing starts slow. That's a huge shift in their risk profile, right?
Exactly. Approximately 70% of Progressive's $438 million in trailing 12-month revenue comes from re-roofing and maintenance. These services are driven by wear and tear, the aging condition of existing roofs.
Not by building new buildings.
Right. Rather than being tied to the volatile new construction cycles. Think about it. A leaky roof needs fixing or replacing regardless of interest rates or consumer confidence. This provides a much more stable recurring revenue stream, fundamentally diversifying TopBuild's overall revenue base.
What were the financial terms of this acquisition, and what are the implications for TopBuild's future growth and profitability?
The $810 million purchase price represented approximately 9.1 times Progressive's trailing 12-month EBITDA. The company expects the deal to be immediately accretive to adjusted earnings per share.
Meaning it boosts profits right away.
Boosts earnings per share from day one, yes. They also project to generate $5 million in synergies.
Synergies, how do they get those?
Things like combining purchasing power for shared materials, streamlining logistics routes by eliminating redundant deliveries, merging back-office functions like HR and accounting, practical efficiencies. It's about making 1 + 1 equal more than 2.
Got it.
The key implication here is that this acquisition establishes a new, scalable platform for both organic growth and future M&A within the commercial roofing space. This fundamentally diversifies TopBuild's end market exposure, reducing its reliance on the new residential construction cycle and creating a significant new long-term growth vector that can stand on its own.
After funding these ambitious acquisitions, which clearly require significant capital, how does TopBuild return capital to shareholders? Do they pay a dividend, or do they have a different strategy?
Their primary method of returning capital to shareholders after investing in growth through M&A is through share repurchases.
Buying back their own stock.
Yes. The company maintains a large and active share repurchase program, which signals management's confidence in the business's outlook and their belief that the stock is an attractive investment at current prices. In February 2025, the board authorized a new $1 billion share repurchase program.
Another billion. They've done a lot already, right?
They have. This followed $966.4 million in buybacks in 2024. They're clearly very active in this space, effectively reducing the number of outstanding shares, and thus increasing earnings per share for existing shareholders.
So, do they pay a dividend at all, or is it all buybacks as their preferred method of shareholder return?
No. Consistent with its aggressive, growth-oriented strategy, TopBuild does not currently pay a dividend. Their policy explicitly prioritizes reinvesting all available cash flow into those high-return M&A opportunities and opportunistic share repurchases.
Growth first, basically.
Exactly. Believing these provide a higher long-term return for shareholders than a recurring dividend payout. And it's also important to note that TopBuild maintains a strong and flexible balance sheet to support these strategic objectives. In May 2025, the company proactively extended and upsized its senior secured credit facilities to $2.25 billion.
So they have plenty of borrowing capacity.
Ample capacity. This provided them with the firepower to fund future acquisitions, including that large, all-cash progressive roofing deal, while still maintaining a prudent leverage profile. This financial flexibility is absolutely critical for their M&A-driven growth strategy, ensuring they have the dry powder to execute when opportunities arise.
Who's leading TopBuild? How experienced is their executive team, and what's their track record like in terms of executing on these strategic goals?
Yeah, TopBuild is led by a seasoned executive team with deep experience not just in building products, but specifically in the demanding construction industries. Robert Buck, their president and CEO, has been a central figure.
Been there since the spinoff.
Yes, leading TopBuild since its 2015 spinoff from Masco Corporation. He has overseen its remarkable transformation from a spinoff to the market leader it is today. His background is rooted in operations, which is crucial for a company that relies on on-the-ground execution.
And the CFO.
Robert Coons. He joined in 2018 and brings extensive financial experience, having held senior finance roles at Mohawk Industries, a major global flooring manufacturer. So real industry depth there.
What about their track record as a team? Have they consistently delivered on their promises and managed to integrate all these acquisitions successfully?
The management team's track record is very much defined by disciplined execution and consistent delivery. They have consistently delivered on their strategic goals of expanding margins, generating strong cash flow, and creating shareholder value through that highly effective M&A program.
So they've done what they said they'd do.
Pretty much. And the successful integration of numerous past smaller acquisitions, all 31 of them, lends significant credibility to their ability to manage the large and complex integration of progressive roofing. This isn't their first rodeo. They have a refined playbook for integrating new businesses, which is critical for such a large acquisition.
How is TopBuild structured to ensure accountability and align with shareholder interests? What does their corporate governance look like, and how does it protect investors?
They have a corporate governance structure designed specifically to promote accountability and align the interests of the board and management with those of shareholders. The board is composed of 8 members, 7 of whom are independent.
High level of independence, that's good.
It is. It's a strong sign of robust oversight and reduces potential conflicts of interest. Also, the roles of chairman and CEO are separate, with an independent chairman, Alex C. Covington.
Also considered best practice.
Yes, widely considered a best practice, as it provides a clear separation of power and leadership. The board itself possesses a diverse range of experience, drawing from finance, manufacturing, logistics, human resources from major corporations like GE and TRW Automotive. Brings a breadth of expertise.
And specifically for shareholder alignment, beyond the board's structure, are there other policies in place to ensure management acts in shareholders' best interests?
Yes, absolutely. While direct insider ownership, meaning the percentage of shares owned by executives and directors, is relatively low at approximately 0.47%, the company has strong shareholder-friendly governance policies in place that ensure alignment. These include the annual election of all directors, giving shareholders regular input. There's a majority voting standard for uncontested director elections, ensuring broad consensus.
What else?
They also have anti-hedging policies to prevent speculative trading by insiders against the company's stock, and incentive plan clawback provisions, which allow the company to reclaim executive compensation if performance metrics aren't met or if there's misconduct.
So checks and balances.
Right. And crucially, executive compensation is also heavily tied to performance metrics, further aligning management's incentives with long-term value creation for shareholders. It's a very robust structure designed to protect and reward long-term investors.
Let's turn to valuation. How does TopBuild's stock currently stack up in terms of how the market is pricing it? Is it cheap, expensive, or fairly valued?
Okay, so as of mid-2025, TopBuild trades at a price-to-earnings, or PE, ratio of approximately 18.4x and a price-to-book PB ratio of 5.1x.
How does that compare? Is that high or low?
Well, it's essential to contextualize these figures against relevant industry peers and the company's own historical valuation ranges. The valuation of construction companies is heavily influenced by their position in the economic cycle.
Right, they swing up and down.
Exactly. Yeah. So, through the cycle perspective, looking at how it's valued over peaks and troughs, rather than just a snapshot, is critical to understand if it's cheap or expensive relative to its inherent value and future prospects.
We have a table of comparable company valuation multiples from mid-2025. How does TopBuild compare to its peers like Installed Building Products, Owens Corning, Masco, and Carlisle? What does that tell us?
Okay, looking at that, the analysis shows that TopBuild trades at a very similar valuation to its closest public peer, Installed Building Products, IBP. On an EV/EBITDA basis, BLD is 11.3x and IBP is 11.1x. Very close.
MPE.
Similar story. BLD is 18.4x and IBP is 17.9x. This suggests the market sees them as very similar businesses in terms of their core operations and growth profile.
Makes sense. How about versus Owens Corning?
Big difference there. TopBuild trades at a significant premium to a material supplier like Owens Corning, which is at 5.4x EBITDA and 9.2x PE.
So why the big difference there? Why would Owens Corning trade at almost half the valuation multiple?
It's largely about the fundamental business model. Manufacturing, like what Owens Corning does, is inherently more capital intensive. Think huge factories, specialized equipment, significant ongoing capital expenditures.
Lots of money tied up in assets.
Exactly. This often translates to lower valuation multiples. TopBuild, on the other hand, is primarily a service and distribution company with a much lighter asset base relative to its revenue.
So more profit per dollar of assets.
Right. This allows it to generate more profit per dollar of assets employed, creating a higher return on invested capital, and the market often rewards that capital efficiency with a higher multiple.
How about compared to Masco or Carlisle? More diversified companies.
Compared to those more diversified building products companies, TopBuild PE is slightly higher, but its EV/EBITDA multiple is roughly in line with Masco 11.3x versus 10.0x. It's notably below the premium multiple awarded to Carlisle, though, which is way up at 15.0x EV/EBITDA.
What's fascinating here is, why might Carlisle command a higher multiple despite being a diversified building products company, which might sound similar to TopBuild's growing diversification?
Well, Carlisle's higher EBITDA margin of 26.4% compared to TopBuild's 20.2% is probably a big factor.
Higher margins get a higher multiple.
Often, yes. It suggests a more efficient business model, or perhaps a different mix of higher margin offerings that the market specifically rewards. It indicates that Carlisle might be extracting more profit from each dollar of revenue, or operates in segments with better underlying economics, or maybe has a greater portion of its revenue coming from recurring, highly profitable services. The market often pays a premium for higher margins and perceived quality of earnings.
So, what does all this mean for how the market might value TopBuild in the future, especially given this strategic shift with progressive roofing and the push into commercial? Could it fundamentally change how investors perceive it?
Yeah, the strategic shift into commercial roofing could absolutely be a catalyst for a significant future re-rating of TopBuild's valuation.
A re-rating, meaning the market values it differently.
Exactly. Historically, the market tended to value TopBuild primarily as a company highly levered to the cyclical U.S. new residential construction market. That was the primary lens, leading to a valuation that reflected that cyclicality.
Tied to housing ups and downs.
Right. However, the Progressive Roofing acquisition materially increases the proportion of revenue derived from more stable, non-discretionary commercial re-roofing and maintenance services, as we discussed.
Smoother revenue.
Exactly. As the market digests this reduced earnings volatility and recognizes the new, scalable platform for growth in commercial roofing, there is a strong potential for the stock to be awarded a higher, more stable valuation multiple over time.
So it might get valued more like Carlisle, maybe.
Potentially closer to diversified industrial service providers with steadier revenue streams, rather than remaining purely in the more cyclical, pure-play residential construction company bucket. It's about changing the fundamental narrative and the perceived risk profile of the business.
Let's dig deeper into the risks. Even with all their strategic moves, what are the biggest macroeconomic and cyclical threats TopBuild faces that could truly impact their performance?
Well, the single greatest risk to TopBuild's earnings is still a significant sustained downturn in U.S. housing activity.
Still number one risk.
Yes. Their installation segment in particular is directly exposed to the volume of new single-family and multifamily housing starts, which are highly sensitive to mortgage rates, inflation, and the overall health of the economy. If interest rates spike again, for example, or consumer confidence plummets, that impacts new home construction directly and immediately, slowing their order book.
And if we were to enter a broader, deep economic recession, how would that impact them, even with the new re-roofing exposure?
A broad economic recession would undoubtedly negatively impact both residential and commercial construction activity, while the company's increased exposure to re-roofing does provide a crucial buffer, giving them a more stable base of revenue.
It helps, but doesn't make them immune.
Exactly. A severe or prolonged downturn would likely lead to project delays and cancellations across all their end markets. This would ultimately reduce demand for both their installation services and their distributed products. No sector is entirely immune to a deep and prolonged recession, and while they are more resilient now, they would certainly feel the pinch.
What about risks related to their operations and strategy execution, specifically concerning that large, Progressive Roofing acquisition? That sounds like a lot to chew off.
Yeah, the $810 million Progressive Roofing acquisition is indeed a significant undertaking, and it brings with it several operational and execution risks. Potential issues include culture clashes between the two organizations, which can subtly undermine productivity.
People stuff. Always tricky.
Always tricky. The loss of key management or sales personnel from Progressives who might not want to integrate into a larger entity. Disruption to existing customer relationships if the transition isn't seamless. And crucially, there's always the risk of a failure to achieve the projected $5 million in cost synergies they've identified.
So the deal might not deliver as expected.
Right. A flawed integration could impair the strategic rationale of the deal, leading to higher than expected costs, lower than expected revenue, and even a write-down of goodwill on their balance sheet, which would be a significant financial hit.
We've discussed labor and supply chain before, but how do they factor into risk here? Could they derail growth even if demand is strong?
Yes, they absolutely could. The company's ability to grow at its desired pace is ultimately constrained by the availability of skilled labor. A persistent labor shortage could drive up wages faster than TopBuild can pass on price increases to its customers.
Squeezing margins again.
Right, compressing their margins. Similarly, unexpected spikes in the cost of key materials like fiberglass, resins, asphalt, which are all commodity-linked and can be volatile, could severely harm profitability if these costs cannot be fully passed through to customers in a timely manner. They need to manage both sides of that equation, input costs and labor costs.
Does their national presence shield them from localized issues, or are they still vulnerable to regional downturns in specific housing markets?
Well, while TopBuild is a national company with a broad footprint, its revenue is still influenced by the relative strength of regional housing markets. Construction, by its nature, can be very localized.
Right. Texas isn't California.
Exactly. So a sharp localized downturn in a key region where they have a lot of branches or derive significant revenue, maybe the U.S. Southeast or Texas, often high-growth areas could still have a disproportionate impact on their overall financial results, even if other regions are performing well. They are diversified geographically, but concentration in certain boom-bust regions still presents a risk.
What are the competitive and regulatory pressures they face? Is competition fierce? And could those favorable building codes, which have been such a tailwind, suddenly change direction or slow down?
Yeah, the insulation installation industry is characterized by intense local competition, particularly from those thousands of smaller players. As we discussed earlier, during periods of weak demand, these smaller, low-overhead competitors may compete aggressively on price just to win business and keep their crews employed.
A race to the bottom sometime.
It can feel like that locally. This could put significant pressure on TopBuild's margins, forcing them to choose between market share and profitability, which is a constant strategic tension. And regarding regulation, while building codes have been a strong tailwind.
A super cycle.
Right. An unexpected reversal or a significant slowing in the trend towards stricter energy efficiency standards could remove a key secular growth driver for them, undermining one of their core advantages. Similarly, new environmental or safety regulations in the construction industry could impose additional compliance costs on the business, which would impact profitability if those costs cannot be absorbed or passed on to customers.
So for you, the learner, if you wanted to track TopBuild's performance and risk, what key indicators should you keep an eye on? What specific data points are most telling about the health of the business and the industry?
Okay, good question. First, I'd focus intently on macroeconomic indicators. Monthly data on U.S. housing starts and building permits from the U.S. Census Bureau are the most direct leading indicators of demand for their residential insulation business.
Tells you what's coming down the pike.
Exactly. They tell you about the volume of new work coming online in their core market.
And for their own internal operations once a project is underway and they're executing.
For their own operations, operational metrics like same-store sales growth provide a clear view of their underlying organic performance, stripping out the impact of acquisitions.
So, growth from existing stores, not just buying new ones.
Right. You want to see if their existing branches are growing without relying only on new acquisitions. Also, the relationship between material cost inflation and the company's realized price increases is a key determinant of gross margin performance. Are they able to pass on their rising costs effectively? This is critical for profitability.
What about their strategic moves, like future acquisitions and, of course, the ongoing integration of Progressive Roofing?
Strategic milestones are crucial. You need to watch the progress on the integration of Progressive Roofing very closely. Are they hitting those synergy targets? Critically, are they retaining key personnel from the acquired company? That talent is invaluable.
And future deals.
Yeah, the pipeline for future acquisitions and the valuation multiples they pay for new deals should also be closely watched to ensure they're being disciplined and not overpaying for growth.
And finally, what financial health metrics, looking at their balance sheet and cash flow, should we pay attention to for long-term health?
Okay, financial ratios like working capital as a percentage of sales, free cash flow conversion, how much of their earnings turn into actual cash that can be used.
How good are they at generating cash?
Exactly.
Yeah.
And return on invested capital, ROIC, are essential measures of the company's financial efficiency and its ability to generate value from its investments. These tell you if the business is running lean, efficiently converting profits to cash, and allocating capital wisely.
So what's the big takeaway from this deep dive into TopBuild Corp? If you're looking for a succinct summary of this fascinating company, what would it be?
Well, TopBuild Corp presents a compelling investment case built on a foundation of dominant market leadership, a proven M&A-driven growth strategy, and strong alignment with powerful secular trends in energy efficiency and sustainability.
Solid foundation.
Yeah. Their management team has demonstrated a strong, disciplined track record of operational execution, consistently translating top-line growth into impressive margin expansion and robust free cash flow, indicating a high-quality business model.
And that strategic pivot with Progressive Roofing, which seems so significant for their future.
That acquisition is truly transformative. It fundamentally diversifies the business, significantly reducing its dependence on the new residential construction cycle and creating a substantial new platform for long-term growth in the commercial roofing sector, which has its own stable, recurring revenue streams. This enhances their resilience.
But you mentioned inherent risks, which are always important to keep in mind for any business. Can't ignore those.
Indeed. Despite its strengths and diversification, the company remains fundamentally tied to the cyclical nature of the U.S. construction market and is vulnerable to downturns driven by higher interest rates or a broader economic recession. Furthermore, the successful integration of the large and complex Progressive Roofing acquisition is critical and represents a significant execution risk in the near term.
Still got to deliver on that deal.
Absolutely. And the sustainability of their margin performance will also depend on the company's ability to effectively manage volatile material costs and navigate a persistently tight labor market, which can drive up wages.
So what does this all mean for you, the listener, as you synthesize all this information? What's the ultimate takeaway for making an informed judgment about TopBuild?
Ultimately, an informed view on TopBuild hinges on your outlook for the U.S. construction market as a whole and your confidence in management's demonstrated ability to continue its successful track record of integrating acquisitions and driving operational efficiencies. The company is certainly better positioned today to weather a cyclical downturn than at any point in its history.
Thanks to that diversification.
Right, thanks to its diversification and strong operational core. However, its fortunes remain inextricably linked to the broader industry it serves, and understanding that interplay is key.
As we wrap up this deep dive, consider how companies operating in seemingly traditional industries like insulation and roofing are actually at the forefront of major global trends such as energy efficiency, climate resilience, and even the strategic reshoring of manufacturing.
Yeah, it's not always the flashy tech companies that are driving these profound shifts.
Exactly. How might understanding these underlying long-term forces and their impacts on seemingly boring businesses unlock surprising insights into other companies you might encounter in your daily life?
And we encourage you to think about other industries that might be benefiting from similar regulatory supercycles or secular tailwinds that aren't immediately obvious. Where else is government policy or a long-term societal trend quietly shaping the future of a business, making it more resilient or opening up new avenues for growth? The answers might truly surprise you once you start looking beneath the surface.